15 years after first issuing the differential voting rights or DVR shares, auto major Tata Motors last week announced that it is winding them down. The company came up with the DVR issue in 2008 to raise funds without diluting its ownership. DVR shareholders carry a tenth of the voting rights of ordinary shareholders with entitlement to a 5% higher dividend. With Tata Motors extinguishing its DVRs, analysts believe the instrument has run its course and the Indian market is unlikely to see any such issues ahead.
In the last 15 years since Tata Motors DVRs came into existence, there were 3 other DVR issued by Future Retail, Gujarat Inari Coke and Jain Irrigation. And other than Tata Motors, Jain Irrigation is the only one which is quoting, and that too at a 40% discount. Volumes have been decent only in Tata Motors DVR, and now with this cancellation and exchange, DVRs would become a forgotten instrument. But yes, the truth is that it was quoting at nearly 40 to 50% discount most of its 15-year life, and this discount reduced only when the announcement of cancellation happened. So I doubt whether any listed entity would actually have plans to issue DVRs, at least in the foreseeable future.
Notably, DVR shares have been fairly popular overseas, used by companies such as Berkshire Hathaway, Alphabet, or Google and Facebook in the US. However, they failed to pick up in India due to not finding favor with institutional investors and the huge discount factor.
As an alternative to ordinary shares, I think Class A shares, is not a bad proposition at all if you look at globally. Globally, Class A proposition, works. Because its minority shareholders anyway, would not like to have too much emphasis on the voting rights. And at the same time, if they do end up getting slightly higher dividend, it works good for them. So from that perspective, the Class A share should work. But in India, it has not worked. Maybe, institutional investors probably did not like the concept of not having the full voting rights. So that did not work well with them. Certainly, the DVR shares also did not work on the market. In the market, rest of the places in the world, the discount between the ordinary shares and the Class A shares or the DVR shares would be around 15 to 25% at the worst. 25% at the worst. In India, the discount between the ordinary share and the DVR share has been somewhere around 40 to 55%.
Besides, as part of the cancellation scheme, 7 ordinary Tata Motors share will be issued for every 10 DVR shares. The delisting of the latter, however, will take 12 to 15 months. Choksi also notes that the arbitrage opportunity between the two stocks is largely over as the DVRs have already moved higher. The pricing differential between the DVR and ordinary share now only reflects the interest and taxation component, he said. As for the Tata Motors shareholders, the DVR cancellation will increase the stock's EPS and increase its liquidity and market capitalization as per the company. Today on August 2nd, market action will remain stock-specific ahead of Q1 earnings of Ambuja Cements, Godrej Properties, Gujarat Gas, Indigo and Mankind Pharma, among others.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
She's working her way to the corner office. Business Standard.